Hi everyone, and welcome to another Software and Internet Monthly Market Report brought to you by Sanford Advisors. I think the biggest story here, actually for the month, is probably what's going on in the public markets. So you can see here, obviously, this S&P is down 8%, and a lot of that is because of the movement of the tech stocks downwards. So you can see our SaaS index is down 16% just for the month of April, obviously a lot more year to date. And then the software non-SaaS index is down 11% as well. So there continues to be a lot of downward pressure on the public markets, and that's going to start to show up in the VC and M&A markets, which we'll talk about here a bit in a second. But on the M&A side of stuff, is obviously a huge month. A lot of it was driven by several large transactions. So $69.4 billion invested in April, probably one of the biggest months we've ever seen. A lot of that was obviously driven by the $44 billion transaction that Elon Musk acquiring Twitter. 130 transactions in the month of April, so we'll get into how that compares to previous months, but it's definitely down. And then the median revenue multiple across all transactions in April of 6.5 times. So that started to normalize for sure. Other big transactions, Brookfield Business Partners acquired CDK for 8.3 billion, and SailPoint was acquired by Thoma Bravo for 6.9 billion. Those transactions were done at 4.7 times revenue and 14.7 times revenue, respectively. So still pretty healthy, especially on the larger side of the market, and especially those private equity deals for very large software companies. So what does this mean for the year? Well, obviously the Twitter deal and some other these large transactions really skews this, but it's going to be a very big year in terms of the dollar volume. More importantly, for the mid market, we are seeing a little bit of a trending down, obviously in the annualized number of transactions. So that's obviously going to be impacting the mid market more than the larger end of the market. So I think what we expect, obviously, is it's obviously going to be a bigger year in terms of dollars deployed into M&A than last year. And I would think that we might even be lower than the 1900, the annualized number of transactions that we're showing here, but probably not as the dip that we saw in 2019 and 2020. In terms of valuations, the variability tightened in this so far in the second quarter. We'll see where this kind of plays out as the months kind of progress. But the first quarter and the start of 2022 was quite wide in terms of the 25th percentile and the 75th percentile. That definitely narrowed in the second quarter. We've been talking about this a lot, the variability of valuations. Would expect obviously some normalization in this and some tightening of this as we kind of progress through 2022, especially if we kind of continue to face a more challenging market. You wouldn't think, obviously, and what we're seeing in our transactions is no real degradation in valuations yet on the M&A side, and this chart kind of shows that. Like the SaaS valuations continue to be elevated even over last year, and the non-SaaS valuations are elevated as well. I would think these normalize and probably are more consistent with last year's numbers, but we'll see as the year kind of goes on. And then obviously we track this a lot. We've talked a lot about the pandemic, elevation in the number of deals per month. This, it's come down so far in 2022, 130 deals for the month of April. So we'll continue to keep our eyes on this, but it's a very interesting trend to watch. And this is a real kind of KPI for watching the future of the M&A market and how robust it's going to be. On the VC side of things, 10.9 billion invested in April, 423 transactions, and $5 million medium deal size. So very consistent metrics there. Some very big deals, obviously. Epic Games raising $2 billion was the biggest by far transaction for the month. And then, where are we tracking on the VC side of stuff? Well, obviously, deals are going to be about flat over the year over year, and the dollar volume deployed is probably going to be up based on where we are today. And then lastly, valuation. So we are seeing a dip in early stage valuations. You can see that here, moving from 33 times to 13 times. So that's a big move. The other valuations are still up and holding, but we'll see where they end for the rest of the year. Anyway, have a good month, and we'll talk to you next month.